few weeks ago, I showed you the Trading Strategy Guides twist on the London breakout strategy. Well, Trading Strategy Guides has renamed their version of the LBS and has developed a great indicator for it as well. And I'm really excited about this one. I may have to stay up for a few London sessions and play with this. Stay tuned and I'll tell you about it. Hi, this is Tim from TradingStrategyGuides.com. I'm hoping to get our Professional Trader series off the ground very soon. Don't forget to comment below on what topics you would like to see us cover. Remember, this will be a free course available right here at the Trading Strategy Guides YouTube channel on Wednesdays. Today's trade pick is a moving average cross on the Euro Swiss franc. We'll look at that shortly, but first I'll update you on a couple of open trades. Then I'll talk about TSG's Big Ben breakout strategy and indicator. I'm really excited about this, guys. And lastly, a very deep dive into the archives to the very beginning for today's trading maxim. Happy Hump Day. Remember to click the subscribe button and hit the bell so you don't miss any of these great strategies and indicators. All right, let's go through the open trades. The Aussie Canadian was hanging around down here, and we were waiting for the PSAR to pull down and start trailing our stops. Then yesterday it just popped right up and took us out right at our break-even stop. So we're done with this one. I would like to point out that this is an example of what I tell you all the time. The momentum was right here. The momentum ended and we got some consolidation, sideways movement right there. And that's the problem. Consolidations can break in either direction. So when you see the price winding up like this, make no assumptions. Be prepared for it to break either way. And the US dollar Japanese yen dropped right down yesterday and hit our first target. Bam. Moved our stop to break even right here. Now we're going to wait for the PSAR to drop down here so that we can start trailing stops on this one. And that's all the open trades for today. We'll take a look at today's setup on the Euro Swiss franc Forex pair shortly. First, I want to talk about the Big Ben breakout strategy. I'm not going to go into great detail about the London breakout strategy in this video. I did that in a video back in January. Look in the upper right hand corner of this video for a card that will link you to that video if you'd like to check it out. I'll also include a link to it in the description below. Today I want to tell you that Trading Strategy Guides has put a new name on their version of the strategy. If you saw my video, you'd know it's not just your dad's old London breakout strategy. So the name for our new strategy is now the Big Ben breakout strategy. Here's just a quick review of the rules of the Big Ben breakout strategy. Number 1, identify the range. Number 2, look for a break of the range during the hour before the London Open. Number 3, buy or sell on a reversal of the break during the first hour of the London session. Number 4, use your trade management plan to manage the trade. And number 5, if the price doesn't return to the range after the first hour of the London session, close the trade. Now, I'm going to be straight with you guys. I'm still very new to this indicator. I'm definitely no expert on it since I just saw this thing yesterday for the first time. But I wanted you guys to see this. I'm going to be playing with it for a few weeks and then I'll review it in a little bit more depth with you then. For me, just the fact that it draws the session lines on the chart automatically is a huge thing. But then it analyzes the breakouts for the proper signal. As I understand it, it works in 3 signal modes. Mode 1 is a false breakout just ahead of the London session. This follows the rules of the strategy. It waits for London pre-start time, seeks the breakouts, and generates a signal back to the channel as London starts, as you can see in this chart right here. This would be the breakout of the range, and this would be the signal on the open to sell back into the range. Mode number 2, uses a false breakout and trend. This mode uses a signal from the previous mode, but additionally filters with a current global trend. The trend is calculated from the last two Asia ranges. If the last Asia range is fully higher than the previous, then it's in an uptrend. If it's fully lower, then it's in a downtrend. Otherwise, the trend is undetermined. Uptrends and downtrends are painted with special colors, light green and light rose, to be more perceptible. So you can see this is a downtrend, so the Asia session is painted in light rose. There's no trend here, no trend here. Now we've got an uptrend painted in light green, and we've got another uptrend painted in light green. Each of these is a new day and a new Asia session. Then mode number 3 uses only the trend direction and ignores breakouts in London pre-start at all. The logic is very simple. If the trend is up at the London start, the signal is buy. If the trend is down, then the signal is sell. This mode can be used as a lightweight version of the previous mode. This mode is not mentioned in the London breakout strategy, though it also provides rather good signals with minimum used rules. You can see the difference between this mode and breakout driven modes in this chart. So this is more like a standard London breakout trade. Now this was only intended to give you guys a quick overview of what this indicator can do. As I said, I'm going to spend time with it for a few weeks, and I'll give you a much more in-depth review of it then. I'll probably also have some trade results to share with you at that time. I'll be testing this on a 15-minute chart on all 28 major Forex pairs, so we'll have a good overview of it. If you're interested in working with this indicator, it's available for early access through Friday of this week. That's 2 days. So be sure to check it out right away. I'll include the link in the description below. All right, let's take a look at the setup on the Euro-Swiss franc Forex pair. We've got a nice moving average cross, or MAX, setup on the Euro-Swissy Forex pair. For an MAX strategy setup, we use the 100 SMA in blue and the 20 EMA in purple. For sell signal, which is what we're looking for here, the 20 EMA must be below the 100 SMA. The wider, the better. I like to see a lot of divergence between these two moving averages if possible. Then we look for the price to move above the 20 EMA, like so. And of course you can expect a little upturn in the 20 when that happens, and that's expected. Then we watch for a candle close below the 20 EMA, and that's our sell trigger, which it looks like we might be getting today actually. And here's the trade plan. We're going to sell a daily candle close below the 20 EMA. On the breaking candle, we want to see the volume bar reach up here to the volume average. If it doesn't quite reach the average, but does reach 75% of the average volume, we'll take a half-size position to reduce risk. You can calculate the percentage by taking this volume number, dividing it by this volume average, and you should get at least 0.75. If you don't get 0.75, then stand aside on the trade. Our stop loss will be 1.5 times the ATR, and our first target will be 1 times the ATR. So let's say, for example, this closes right here. Just ahead of the close, we've taken a sell position, and at that point we looked at the ATR. We multiplied that by 1.5. We measured that distance above our entry, and that was our stop loss. We measure 1 ATR below our entry, and that was our first target. If after entering the trade we get a candle close back above the 20 up here, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout below the 20 should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, these two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will have only a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to the break-even point on the second position. I will only risk about 2% of my account on each trade. And that's the setup on the Euro-Swissy Forex pair. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, the deepest dive into the archives for our maxim of the day. Tim's trading maxim number 1. Would you rather be in a trade wishing you were out or out of a trade wishing you were in? Repeat that. Would you rather be in a trade wishing you were out or out of a trade wishing you were in? I say this before I pull the trigger on every trade. It forces me to think of all the rules that apply to the current setup and whether I'm conforming to those rules or not. I always say the trading maxims are not necessarily in order of importance, but there is a real reason that this one is number 1. This is where I started the maxims about 10 years ago. It served me better than any of the other maxims over the years. Remember our Euro-Swiss franc trade plan here. We're going to sell a daily candle close below the 20 EMA. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Also remember to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guides YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Don't forget to let me know in the comments what topics you would like to see us cover in our Professional Trader series. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great hump day, and I'll see you next time.